$1.82 trillion. That's Bitcoin's market cap right now. But honestly, that number hides the real story because underneath it, there are billions, and I mean billions, in leveraged bets stacked on both sides. It's a liquidation minefield. The price is literally being torn between two giant pools of capital. So in this breakdown, we're going to use the data to map out exactly where that fuel is and figure out which direction is about to explode first. Yeah, we're calling this the 1.8 trillion powder keg for a good reason. You'll see why. Beneath that huge number lies some serious, hidden instability. Okay, so to really get this, you have to understand liquidation levels. Think of them as price points where leveraged positions get automatically nuked, force closed. When the price hits one, it kicks off this chain reaction of forced buying or selling. They're like powerful magnets, literally pulling the price toward them. And, when you're talking about a $1.8 trillion asset, the sheer amount of money at risk in these cascades is it's enormous. If you find this kind of analysis valuable, do me a favor and drop a like and share this. All right, let's get to the good stuff, the heat maps, and see how this whole situation has been building. We're going to track how these pools of leveraged money have been moving around over just the last 5 days. So on the left, you've got November 25th. On the right, November 30th. What's so wild here is you can literally watch those bright yellow bands, that's the high leverage liquidity, getting thicker and more concentrated. The battlefield is being drawn right before our eyes. First up, let's talk about the main character in this whole drama, this massive wall of sell-side liquidity sitting right over our heads. So by November 27th, check this out. This incredibly bright, dense yellow band just above 92 grand, that represents a giant cluster of trapped short positions. This thing became a hard ceiling that the price just kept slamming into and failing to break. For real-time updates on levels just like this, make sure you follow us on Twitter, @SnippetLabs. But for every action, there's an equal and opposite reaction, right? Let's look at the contradiction, the opposing force that was building up just below the price. Fast forward 2 days to November 29th, and boom, a brand new thick yellow band forms just under $90,000. This is the other side of the trap we were talking about. Billions in leveraged long positions that created this critical support floor, a line the market absolutely had to hold. And that right there brings us to what we're calling the two-sided trap. You've got billions in shorts betting on a dump, billions in longs betting on a pump, and the market is just stuck, perfectly and dangerously right in the middle. This set up two very, very simple triggers. For the bulls to take over, price had to smash through that 92.5 short wall. For a breakdown, it had to crack that $90,000 long support. Something had to give. And this is the moment right before it all went down on November 30th. This shows that compression perfectly. I mean, look how tight the price is. It's pinned between that massive yellow resistance overhead and that growing yellow support band below. The market is coiled like a spring, just waiting to snap. So this is the point where the pressure just became too much. The trap was sprung. And the heat map, well, it shows us exactly what happened next. And there it is, the cascade. The market tried but failed to break resistance. So what did it do? It turned around to hunt the liquidity below it. Price just sliced right through that $90,000 support, triggering a chain reaction, all those leveraged longs being forced sold. You can see the price action just wiping out those liquidity zones one after another, all the way down to 88,000. So let's recap where we are right now. That major resistance wall up at 92.5 to 93K, totally untouched. That support at 90K, it's gone, it's broken. And now the next major support zone around 88,000 is under attack. If you want to see how this next fight plays out, you should probably subscribe to the YouTube channel. So let's put it all together. What's the big picture? First, this market is driven by one thing and one thing only. It's a hunt for liquidity. Second, that absolutely massive wall of short liquidations is still sitting up there untouched above 92.5. Third, this recent drop, it cleared out a bunch of longs, sure, but all it really did was expose the next level down. All this means one thing: extreme volatility is pretty much a guarantee from here. And all of this leaves us with the final critical question. With a support floor now totally weakened, has that giant liquidation pool at 92.5 become an even stronger magnet, pulling the price up for a massive short squeeze? Or, by breaking support, did the market just signal that there's a lot more pain to come for the longs? What do you think? Subscribe and drop a like below. Follow us on X for more updates. See you in the next one.